Hey! What's up, Bitcoin maximalists? Welcome to the Bitcoin Street Journal podcast, the only podcast that tells you the truth about Bitcoin, money, and why everything else is just noise. I'm Anna, and oh my god, do I have a show for you today. Bitcoin is sitting pretty at $115,000. Strategy just added 390 more Bitcoin to their already insane stack. And bears? Oh, the bears got absolutely demolished to the tune of $165 million in liquidations. We're talking institutional accumulation on steroids. We're talking about the Federal Reserve about to cut rates. We're talking about nation states mining Bitcoin with hydroelectric power. And yes, we're gonna roast some altcoins so hard that Vitalik is gonna feel it from wherever he is. But first, quick announcement. Head over to the BitcoinStreetJournal.com and set up your free Nostr profile. Stop giving your data to centralized platforms. Be sovereign. Be free. And once you're on Nostr, zap me some sats to show this podcast some Lightning Network love. Alright, let's dive into the orange ocean of Bitcoin dominance. Buckle up, cause this is gonna be a ride. Anna, okay, let's talk numbers, cause numbers don't lie, and these numbers are beautiful. Bitcoin is currently trading at $115,021. That's up 1.12% in the last 24 hours, which might not sound like much, but that's a $1,276 move on a $115,000 asset. Do the math on your portfolio gains. Our 24-hour high, $116,032. We kissed that level and we're consolidating. The low was $113,083. Giving us a nice healthy $3,000 trading range. That's not volatility. Folks, that's energy. That's Bitcoin coiling up for the next move. Market cap? Oh, just 2.29 trillion with a T. Let me say that again because it feels good. $2.29 trillion. But here's my favorite stat, and this is the one that makes me smile every single morning when I check my phone. Bitcoin dominance is at 57.83%. That's right. While every altcoin influencer on Twitter is screaming about alt season and the flippening, Bitcoin is out here controlling nearly 60% of the entire crypto market cap. The king doesn't just reign, the king dominates. We've got 19,940,681 Bitcoin in circulation right now. Only 1,059,319 left to mine before we hit that beautiful, perfect, unchangeable number, 21 million. Think about that. We're 94.95% of the way through Bitcoin's issuance. The scarcity is real. The supply shock is coming. Trading volume in the last 24 hours, $60.5 billion in real volume. Not wash trading on some sketchy exchange that's gonna rug pull next month. This is actual Bitcoin, changing hands on real markets. And for those keeping score at home, we're only 8.59% down from our all-time high of $126,080 that we hit just 3 weeks ago on October 6th. 3 weeks ago, people. If you bought Bitcoin when I started this podcast in 2023 at $17,000, you're up 576%. Meanwhile, your friend who bought the Ethereum killer is down 90% and asking to borrow money for gas fees. And I don't mean the car kind. Bitcoin is inevitable. The numbers prove it. The market proves it. And we're just getting started. Alright, this is the headline that should make every CFO in America wake up in a cold sweat. Strategy has added 390 Bitcoin to their treasury. Now before we go any further, let's talk about Strategy. Formerly known as MicroStrategy before they went full Bitcoin maximalist and literally renamed their company to reflect their conviction. Their total holdings now? 640,808 Bitcoin. Do you understand what that means? Let me break this down for you. That's 3.05% of all Bitcoin that will ever exist. Not 3% of what's in circulation. 3% of the maximum supply. 3.05% of 21 million. At today's price of $115,021, Strategy's Bitcoin holdings are worth $73.7 billion. That's more than most Fortune 500 companies' entire market cap. And they're not selling. They're not trading it. They're just stacking sats. Michael Saylor, and let's give credit where credit is due, this man has conviction. While every other corporate treasury is holding bonds that are getting inflated away, while they're holding dollars that lose purchasing power every single day, Strategy is converting every dollar they can get their hands on into the hardest money ever created. They're using convertible notes. They're doing equity offerings. They're refinancing debt. Whatever it takes to acquire more Bitcoin. And you know what? It's working. Here's the game theory that's absolutely beautiful. Every quarter that goes by, Strategy's Bitcoin holdings become a larger percentage of their market cap. They're essentially becoming a Bitcoin ETF with a software company attached. And now there's serious talk about Strategy qualifying for S&P 500 inclusion. Imagine that. A Bitcoin treasury company in the S&P 500. You know what that means? Every index fund, every pension fund, every boomer retirement account that tracks the S&P 500 would be forced to buy Strategy stock. They'd be getting orange-pilled through their 401ks without even knowing it. The race to accumulate Bitcoin at the corporate level has stalled it. And Strategy is lapping everyone else. They're not just winning, they're playing a different game entirely. But it's not just Strategy. Let me rapid-fire some other institutional moves. IBM just unveiled Digital Asset Haven, a full-stack platform for institutions to manage digital assets across 40-plus blockchains. Yes, they're hedging with blockchain, not Bitcoin. But you know where this ends. When those 39 other chains fail, there's only one left standing. David Beckham-backed Prenetics just raised $46.8 million to advance their Bitcoin treasury strategy. Athletes, celebrities, tech companies, everyone is waking up. Even Japan launched a yen-pegged stablecoin. And you know what backs those stablecoins eventually? Bitcoin. All roads lead to Bitcoin. The corporate FOMO is real. The institutional FOMO is real. And once it starts, it's unstoppable. Remember, 21 million Bitcoin, 7 billion people, thousands of corporations, hundreds of nation-states. You do the math. The supply shock is inevitable. Strategy just fired another shot across the bow. Every other company is now asking themselves, can we afford not to have Bitcoin on our balance sheet? The answer is no, they can't. And they're about to find out the hard way. Anna, let's talk macro. Because what happens in Washington, D.C. affects every single Satoshi in your wallet. Here's the headline that has Wall Street buzzing. There's a 98.3% chance of a 25 basis point rate cut happening in 3 days. The Fed meeting is Wednesday, October 29th. And the market is pricing in a rate cut with near absolute certainty. According to the CME FedWatch tool, it's basically a done deal. Now, what does this mean for Bitcoin? Let me spell it out. Rate cuts equal cheaper money. Cheaper money equals more liquidity. More liquidity equals asset prices going up. But specifically for Bitcoin, which is the hardest asset ever created, rate cuts are rocket fuel. Why? Because when interest rates go down, holding dollars becomes even more painful. The opportunity cost of not owning Bitcoin goes through the roof. And get this. We just got news that Treasury Secretary Scott Bessent says the U.S. has reached a substantial trade framework with China. This potentially removes the need for Trump's 100% tariffs. Translation? More global trade, more dollars circulating, more money printing, more debasement, more reasons to own Bitcoin. And folks, this is happening right as Glassnode data shows that selling pressure has completely subsided. Long-term holders are not selling. The weak hands got shaken out during the recent pullback, and now the diamond hands are accumulating. But here's my favorite story of the day. Over $165 million in short positions got liquidated in the past 4 hours. Can we take a moment of silence for all the bears who thought they were smart shorting Bitcoin at $113,000? Okay, moment's over. They got wrecked. They got absolutely destroyed. And you know what? They deserved it. You don't short the hardest money ever created right before a Fed rate cut. You don't short Bitcoin when institutional demand is through the roof. You don't bet against the honey badger. And here's the beautiful part. When shorts get liquidated, they have to buy Bitcoin to cover their positions. That adds more buying pressure. It creates a short squeeze. Every bear that gets liquidated becomes forced buying. It's a cascading effect. And it's glorious. The Fear and Greed Index just exited fear territory for the first time since the crash. We went from extreme fear to neutral. Sentiment is shifting. Psychology is changing. You know what's wild? Bitcoin is doing all of this before the Fed even cuts rates. Imagine what happens after. Imagine when that liquidity hits the market. Imagine when everyone realizes that dollars are melting ice cubes. Oh, and speaking of no-coiners who got it wrong, remember Peter Zeihan? He went on Joe Rogan's podcast in 2023 and said Bitcoin would go negative. He literally predicted Bitcoin's price would be negative. Bitcoin was at $17,000 when he said that. It's now at $115,000. That's a 576% increase. This is why you don't listen to fiat economists who think money grows on trees. They don't understand scarcity. They don't understand decentralization. They certainly don't understand Bitcoin. Bitcoin doesn't care about Peter Zeihan's opinion. Bitcoin doesn't care about Jerome Powell's opinion. Bitcoin doesn't care about anyone's opinion. Bitcoin just keeps ticking, block by block, transaction by transaction. Immutable, unstoppable, inevitable. Let's talk about something that should make every Bitcoiner smile. Nation-states are stacking Bitcoin. Not companies, countries. Bhutan's state investment arm, Druk Holding and Investments, just moved 517 Bitcoin worth $59 million to new wallets. Now this isn't a sale. This is wallet management. They're probably upgrading security, rotating wallets, doing proper custody procedures. But here's what matters. Bhutan has been mining Bitcoin using their hydroelectric power. They're literally converting waterfalls into digital gold. They're taking renewable energy that would otherwise go unused and turning it into the hardest money on earth. This is a sovereign wealth fund. This is a country's treasury. El Salvador started the trend, but Bhutan's been quietly stacking in the background. And you know what this means? The nation-state race has begun. Once one country starts stacking, every country has to follow or risk getting left behind. The game theory is beautiful and brutal. The first countries to adopt Bitcoin get the most benefit. They buy at lower prices. They secure larger percentages of the total supply. The last countries to adopt, they pay premium prices for scraps. They get orange-pilled the hard way. Meanwhile, the Bitcoin network just keeps getting stronger. Hash rate is at all-time highs. Mining security is at all-time highs. The network has never been more secure. And here's some good news for everyone worried about Mt. Gox's selling pressure. They've extended the creditor repayment deadline to October 31st, 2026. That's another year without that FUD hanging over the market. And honestly, most of those creditors are probably going to hodl anyway. They've waited 12 years. You think they're selling at 115K when Bitcoin's going to 500K plus? If you've held Bitcoin since 2013, you're not a weak hand. You're diamond forged. You're orange pilled to your core. The infrastructure is being built. The adoption is happening. The network is stronger than ever. And we're still early. All right, it's time for my favorite segment. The segment where we take out the trash. The segment where we remind everyone why Bitcoin is the only crypto that matters. Ladies and gentlemen, it's altcoin roasting time. First up, Zcash. Oh boy, Zcash. So Zcash surged 30% in the last 24 hours after Arthur Hayes, yes, the former BitMEX CEO who got in trouble with regulators, predicted the token will reach $10,000. Zcash is currently at $40. So Arthur thinks it's gonna 250x. That's his prediction. Let me tell you something about privacy coins. They're either useless or they're illegal. Pick your poison. Bitcoin already has privacy solutions. Lightning Network, CoinJoins, Taproot. You don't need some centralized privacy coin that's gonna get delisted from every exchange. And here's the kicker. Zcash has a founder's tax. 20% of all mining rewards go to the founders. That's not decentralized. That's a company paying themselves. That's a pre-mined scam with extra steps. Satoshi mined Bitcoin just like everyone else and then disappeared. No founder's tax, no pre-mine, no CEO calling the shots. Next victim, Ethereum. Tom Lee from Fundstrat says ETH remains in a super cycle. He says fundamentals are now leading price. citing surging stablecoin demand and ETH transactions hitting all-time highs. Mocking voice, super cycle, ultra mega super cycle. Everything's a cycle with these guys. You know why ETH transactions are hitting all-time highs? Gas fees. People are paying $50 to move $100. That's not adoption. That's extortion. And stablecoin demand? That's people trying to exit. They're going from ETH into USDC so they can escape the sinking ship. Let's talk about Ethereum's fundamentals. They've changed their monetary policy 17 times. Is it proof of work? No, wait. Proof of stake. Is it deflationary? No, wait. Inflationary. Actually, sometimes it's deflationary depending on how busy the network is. That's not sound money. That's a company making it up as they go along. And the Ethereum Foundation sells ETH at every market top. They're literally dumping on retail investors. BNB just jumped 3% after a $1.69 billion token burn. Oh great, a centralized exchange token that burns supply to artificially pump the price. That's not decentralization. That's stock buybacks with worse PR. If Binance gets hacked tomorrow, BNB goes to zero. That's not an investment. That's a casino chip. Rapid fire roasting. XRP. Still fighting the SEC, still somehow in the top 10. It's the zombie coin that refuses to die. Aptos, the Solana killer. Down 90% from all-time high. Turns out you can't kill Solana when you're both equally centralized. Filecoin, a storage coin that nobody uses for storage. Classic. And my personal favorite, Japan's new yen-pegged stablecoin. A stablecoin pegged to a currency with negative interest rates. A stablecoin pegged to a currency being printed into oblivion. It's like being the best player on the worst team. Here's the bottom line. Bitcoin is decentralized, permissionless, and has a fixed supply of 21 million. Every altcoin is either a solution looking for a problem, a centralized database pretending to be crypto, a security token trying to avoid the SEC, a pump and dump scheme, or all of the above. Bitcoin doesn't need to pivot. Bitcoin doesn't need a roadmap. Bitcoin doesn't have a CEO. Bitcoin is done. It's finished. It works. It's been working for 16 years. It's like comparing gold to pocket lint. Sure, pocket lint is lighter, but nobody's using it to store wealth. Bitcoin is digital gold. Everything else is digital garbage. Okay, let's slow down and get educational for a minute. Because Bitcoin isn't just about price. It's about understanding why Bitcoin is revolutionary. Today's lesson, why Bitcoin's fixed supply makes it the hardest money ever created. Throughout all of human history, every form of money has been inflated. Gold? They discovered new mines. They improved extraction technology. The supply increased. Fiat currency? Don't even get me started. They just print more. They press a button and trillions appear. But Bitcoin? 21 million. That's it, forever. Can't change it, won't change it. Mathematically enforced by the protocol. Every 10 minutes, a new block is mined. Currently, each block rewards the miner with 3.125 Bitcoin. In 2028, mark your calendars, that reward gets cut in half to 1.5625 Bitcoin. This is called the halving. The halving happens every 210,000 blocks, roughly every 4 years. It's predictable, it's programmed, it's inevitable. This creates scarcity, and scarcity creates value. We're mining fewer Bitcoin every day. But more people want it. More companies want it. More countries want it. That's economics 101, supply and demand. The US government printed trillions during COVID. Your dollars are worth less every single day. But Bitcoin? Your Bitcoin is worth more because it's a fixed percentage of the total supply. If you own 1 Bitcoin, you own 1 out of 21 million. That ratio never changes. That's power. That's wealth preservation. And remember, not your keys. Not your Bitcoin. If your Bitcoin is on an exchange, you don't own it. They own it. And they can freeze it. They can lend it out. they can go bankrupt. Get a hardware wallet. Ledger, Trezor, Cold Card. Move your Bitcoin to self-custody. Self-custody is financial sovereignty. It's the whole point of Bitcoin. Be your own bank. All right, Bitcoin maximalists, let's bring this home. What a day, what a week, what a time to be alive and orange-pilled. Bitcoin at 115,000. Strategy stacking 390 more Bitcoin. Bears getting liquidated. The Fed about to cut rates. Nation-states mining with hydroelectric power. The future is orange. Quick final numbers. Bitcoin holding strong at $115,021, up 1.12% in 24 hours. Market cap 2.29 trillion. Dominance 57.83%. The king reigns. Before I let you go, here's what you need to do right now. Number 1, go to the BitcoinStreetJournal.com and set up your free Nostr profile. Stop using centralized social media. Be sovereign. Number 2, if this episode added value to your life, zap me some sats on Lightning. No ads, no sponsors, just you supporting real Bitcoin content. Number 3, move your Bitcoin to self-custody. Not your keys, not your Bitcoin. Get it off the exchanges. Be your own bank. Number 4, share this episode. Orange pill someone today, your no-coiner friend. Your altcoin holding cousin, your boomer parents who still think Bitcoin is fake money. Bitcoin is inevitable. The game theory is playing out in real time. You can either be part of the revolution or you can watch from the sidelines. Stay humble. Stack sats. Think long term. And remember, the best time to buy Bitcoin was 10 years ago. The second best time is right now. This has been the Bitcoin Street Journal podcast. I'm Anna, and I'll see you on the next block.